Hi there, my name is Kim and these are the Wayrider Chronicles, my alternative look at current affairs. Hi there everybody, let's talk about Bitcoin yet again. Depending on which time zone you're in, it either occurred yesterday or this morning or wherever, there was something called the Bitcoin halving, a technical aspect of Bitcoin took place. Before I get into that, I'd just like to talk about a matter of English. When something is halved, normally it means it's cut in half. And up until now, there have been 4 Bitcoin halvings. So how can it be a halving? That's quartering. But I know, I'm being facetious. It's a halving of the payouts, basically, to the people who mine Bitcoin, and mining Bitcoin, they receive Bitcoins. Okay, and it starts to get very technical, but anyway, just thought it would be a curiosity to bring up the fact that actually this is the 4th halving, which is sort of nonsensical, but anyway, this is Bitcoin, go figure. Leading up to this halving that took place yesterday, there has been lots of speculation in specialized websites and commentators, cryptocurrency commentators, that the halving essentially restricts supply of Bitcoin and causes the price to rise, because whatever you say about anything to do with Bitcoin, it's only got to do with it going up in price. There are very few or very rare commentators who actually talk about going down in price, but we all know things go up in price and they did go down in price. And last year it went down a lot, but anyway, it's a different issue, a different point. Back to the halving. So, what exactly is the halving? Simplistically, right back when Bitcoin first came out in 2009, I think, 2009 more or less, but anyway, the principle of Bitcoin was that every time a transaction, now a transaction in Bitcoin in these terms means anything. You can move Bitcoin from one wallet to another wallet, or buy or sell Bitcoin. Any transaction in Bitcoin needed to be registered on what they call a blockchain ledger. That transaction went on to a public ledger, which everybody could see, which everybody can see if they've got the right means of looking at it. And for that transaction to be actually written to the ledger, a computer program, or a person having access to a computer program, had to mine it. Famous mining allergy, which is, in my view, a lot of BS. But anyway, the analogy, not the actual thing itself. But so that took place, and doing that work, which you solve a complicated mathematical formula, which, depending on what's happening in Bitcoin market, is actually easier or more difficult. But anyway, it's complicated. You get rewarded for that. The transaction gets posted to blockchain ledger, and you get rewarded in Bitcoin. That was fine when it was worth $1 or $2 a coin. Now we're at 62 or 63,000 or 64,000, I don't remember the last price, dollars a coin. It starts to be, so you don't actually, unless you're multimillionaire, you're not chucking great wobs of cash of $62,000 at a time for one Bitcoin. You can buy it in increments. Theoretically, you can buy a couple of dollars worth of Bitcoin, and you get a confirmation that you've got 0.0000000 something Bitcoin. Okay, cool, fantastic. What my skepticism is that on top of this halving, so the miners that are doing, they call them miners, people solving these, they're not mining anything obviously, but function of solving this mathematical problem to allow the transaction that they have received to be posted to the blockchain and in turn receive coins, the amount of coins they receive has been halved. Okay, fine. But at the same time, we have Bitcoin was conceived with a maximum of 21 million coins, which in my view is slightly nonsensical. I understand that one of the reasons for this, or one of the motivations behind this, was something called to prevent inflation, sort of like deflationary. It's not actually deflationary because that's not correct. It's a way of not allowing the Bitcoin to, which is ironic because not allowing, sorry, finish what I'm saying, not allowing Bitcoin to have an unlimited amount of issuance. Because, let's take inflation 101, a la Zimbabwean type of inflation. If you've got a government that prints currency that is not based on real economic activity, it's inflationary. So basically it's printing money. There's nothing behind it and everybody knows that. And what happens is that that particular currency falls in value. With Bitcoin they wanted to prevent that, but so it was conceived with a limited, strict limit of number of Bitcoins, which sort of is interesting, but not interesting, in the sense that you've got a currency that is supposed to take over from become a world currency. But essentially what it's doing is you're suppressing one type of inflation and you're creating another type of inflation, which is price inflation. Because everybody knows that there cannot be more Bitcoin. So the whole premises of Bitcoin is inherently bullish. So they're going to go one way. Because it's not like gold, because it's been compared to gold as a asset class that is similar. It's not, because up until, as far as I know, nobody's sure how much gold there is in the ground, and how far you dig down and where you dig, and they're continually discovering new deposits of gold. And let's not talk about the moon and Mars and all the rest of it. So gold, the actual supply of gold is unknown. If you have a known supply of something, you're essentially restricting the supply of something, and you're guaranteeing that it goes up in price. Because the more people that want to buy it, and the less of it there is. Well, we know that there's not, even if you cut it up into tiny little bits and pieces. Let's take a completely absurd thing that when it's supposed to arrive at, they've mined these famous 21 million coins of Bitcoin by 2030 or 35, I can't remember, or 32. Let's say at that stage, one Bitcoin is worth $5 million or $10 million. Keep things really interesting. That means that how are you going to buy and sell it? So the increments, so you'll get 0.000, I don't know, how many zeros to buy the equivalent of $10 worth of Bitcoin. And it starts to become, it goes off into fantasy land, which once again, I actually think the fact that it's restricted, so there is a restricted amount of Bitcoin, means that it makes it less likely, or one of the factors preventing it becoming a substitute. They love this word, fiat currency, but let's just call them a substitute world currency, because it will always go up in price. And go back to something, you sort of, as I said before, you're substituting one type of inflation, or getting rid of one type of inflation, with another inflation, which is price inflation. It keeps on going up. What's the point of that? And what's the use of that? If you've got something that is continually got a thrust behind it to be always jumping 2, 3, 4, 5% going on a upward trajectory every day or every month or whatever, it's sort of very difficult to actually use it for anything else except buy it and sell it when it goes up. That's Bitcoin. See you guys.